Hello guys, and glad to have you on board again today. We have to make an update because things have changed since the weekly update, and specifically regarding Ethereum, and of course other major altcoins have been following the move, but Ethereum itself has been reaching out to a long-term level target for me. $3,000 is an area in which I've always said I'll never release any significant number of my coin until we reach out to this. Here we are, so we need to settle for this level. So today's course is going to be all about that. How do you handle long-term profit-taking areas when the short-term momentum goes absolutely staggeringly stupid? So we're going to settle this, and I'm going to explain how I got to my decision-making process, but most importantly, out of this, explaining how you guys should navigate the current area. Most of this has been said throughout the weekly update. To sum up the core information, don't get overexcited, don't follow the short-term excitement, because this is really all about that. Markets are going excessive. We're going to see how the indicators react to this and how you guys should do your personal risk limitations in these current excessive markets. Okay, so first things first, before going into Ethereum itself, we need to study the big boy Bitcoin. This is where the liquidity is, and even though all of the traction and the attention is now driven excessively into Ethereum, and well, don't get me wrong, this is a definitely fucking good project, and I've always been saying that this will attract more and more attention through time. So am I getting suddenly bearish in Ethereum? Fuck no. It's just that I've bought the thing much lower than they're worth right now, and the question is, I'm getting 20 folds on the initial investment, so of course I'm going to have to log on some gains. How much and what am I going to do next is what we're going to talk today. Okay, so Bitcoin first, as this is our general rule of risk limitation and risk sentiments into the broad crypto market. So where are we? Still into the same old range. We've tried to accelerate in a range, which generally means that we're nearby. We're going to create a range boundary nearby. So I wouldn't be bullish on Bitcoin now. Still the same old rules. We didn't get a bearish signal out there, signaling that the probabilities to get straightforward to 41K were significantly limited, but still it wasn't an appropriate time to go bullish. To let it ride eventually or start selling to pull back to supports, which is exactly what I've done, well, was, I think, the smartest choice to make. Now we're going and trying to inch one way higher, in which I believe we could look for some more attractive signals. So I'm definitely looking at any possible momentum signal to trigger out there, because we're definitely overbought now. The indicator doesn't see it yet, reason why I'm still being patiently and cautiously looking at Bitcoin for my next arbitrage. Of course, I'm going to short sell it. Don't worry, I'm owning Bitcoin, and I'm owning quite a bullish portfolio in general, which means I'm going for hedging position in here. Nothing like going bearish, okay? No one can sell unless you have the coins backing for it. And most importantly, you can never expect to sell more than what you own. That has to be said, okay? Just for my so that my words don't get misappropriately used, because I've seen this quite a lot in the past. People call me perma-bearish. Well, I'm definitely fucking not. My portfolio now is still heavily bullish exposed. I'm just hedging for the risk that we're currently experiencing. Okay, so out of the resistances in Bitcoin, I'm getting more bearish than bullish, which means I'm covering the portfolio in case a bearish move occurs. Okay, so it's more to have a safe and sound approach of a bullish market. Bullish markets just don't go straight line to point A, from point A to point B. We're going to have to create in-between ranges. That's what we're doing now. At least that's what I think. Okay, so that's for Bitcoin. Neutral, but not excessively bearish at the moment. We can still ride our way up towards resistances, so there is not emergency exit button coming from Bitcoin, but we need to definitely have a look at all of the momentum signals that could emerge. We're terminating a bullish cycle. We are below resistances. It's not an appropriate time to be bullish. So Ethereum now, this is where the battle is. Well, everyone is excessively bullish now. Just look at the signals we're getting on the 4-hour reference charts. Well, that means definitely we're going. These are the types of signals you see in a trend, in a breakout. These means we're getting overloaded bullish momentum, but apparently prices don't give a fuck. So this is the only thing you should worry about now. What is the current context? Are we breaking up to a trend, because this is normally trending context that should produce such signals. So rather than looking at the signals first, you should have done one thing. You should have looked at the context. So what is the current context? This is definitely trending. The moving average is below the context is rising, and the moving average as well. Now, what are the contexts doing? The contexts are getting unfolded one to another. So we're definitely accelerating in here. This is what it says. It says that prices are accelerating, and then not just a bit, they're accelerating quite a bit, quite a lot. The thing is that, are we supposed to accelerate in a bullish trend? Well, sure thing we could. That tells one thing to me, because when you are in a trend, you need to focus on the breakout. Where's the momentum breakout on Ethereum? Well, certainly has been there. This is where we broke up. So we broke out of the 700 area. We've created something that looks like kind of a bit of a digestion, and now we're on the verge to break again? Well, we haven't even matured that range. That range to be matured would have gone lower and accumulate and broke again. So we're breaking again without consolidating. I don't like that. That means one thing, the market is not necessarily breaking out there, but very likely going excessive. Sure thing, market excess are rare. If you read the PDF manual, you should see that it generally occurs less than 5% of times. So betting on market excesses is fairly dangerous to me. In that perspective, am I following the current momentum there is on Ethereum? I'm definitely not. So is this a reasonable enough signal to tell me, well, Phil, you don't really have to profit take. 3,000 was definitely a long-term area for you, but who gives a fuck? Everyone in the short run is willing to buy that shit at any price, so you should ride that trend. That's not the current approach. Of course, things are getting excessive, but we're not breaking up in here. So that's the reason why 3,000 was an area of target for my long-term exposition. I'm locking on the gains, pure and simply. Which means I'm not getting bearish, I'm just locking 10%. That's the standard basis minimum I need to profit take at that point. Am I going to go further than that? Well, possibly I will. I can go right up to 25% profit taking, which still means, god damn it, I'll be 75% in. Am I going bearish on Ethereum? Fuck no. I'm still definitely bullish over the long run. I just think over the short term, we're getting stupid. And when things get stupid, well, sure thing they can turn out to go even more stupid, to turn market excesses into bubble. But this is just getting more and more complex. And actually, statistically speaking, betting that an excess will turn to a bubble is just as stupidly anti-statistical as it could be. Just turning a trend into a market excess isn't that easy, but turning a market excess into a bubble doesn't make it easier. So it's really all about the fact that right now we're in a complex situation, because of course we should be ranging daily. We should be building some pullbacks just like Bitcoin does. But the thing is that right now we're getting pretty fucking excessive because people know that anyway there is a weekly trend going on. And it feels like, of course, instead of ranging, we're accelerating. So fighting against these things, let me be real clear, that's a big fucking no. Do you have to short sell Ethereum because things get definitely stupid? Well, they do get stupid, and indicators tell me they do. Does that mean this is a reason to actively fight against? Well, it's not. But is it a reason to stop a profit-taking pattern because we reached out to 20 fucking fold out of current entry prices? Well, definitely not either. So, do you need to profit take, partial profit take on long-term investments in Ethereums? Well, that's a big yes. Do you really need to let it happen and try to short sell because you missed the entire run and people are just boasting for more gains, they're getting greedy, they're getting stupid, so I need to fight against that bullish momentum? That's a big no as well. So don't short sell Ethereum. Please don't. That's as stupid as it could be. We have multi-time frame trends going on, so things can definitely be excessive. But what that tells us is that this is the reference time frame. This is the reference breakout time frame. So try to put it into a more rational perspective. Instead of trying to short sell Ethereum, try to figure out what is the buyable price. Well, weekly trend means we have trend follow opportunity 2 time frame below. 4-hour chart time frame gives us an opportunity to buy any of the third range boundary that gets broken up. Here is where the latest one occurred. Well, That was a trend follow pattern. That was the first one in the trend. So generally there are two. There are rarely more than two, which leads me to believe that the second one might be either we build another third range boundary and we break it up as well, or we go right back to the moving average. This is definitely by far my current favorite pattern. So I think that we're getting pretty fucking far away from the moving average. And the reason why I'm not buying into Ethereum, I'm just letting it ride. But if it for some reasons reverse, I don't even give a fuck on how, when, all of those things. I'm just locking on my gains, and I will definitely put them back when we reach out the moving average prices. So that is my plan going for the weekly or monthly timeframes, the long-term portfolio exposition. I'm locking 10%, and depending on the signals I'll get into the daily and weekly chart within the next few days, I'll eventually consider doubling this profit taking up to 20% of my long-term exposition. I'm not going to go more than that. And then, of course, the goal is to reintroduce that with a little bit of a premium, of course, if we ever retrace to the 4-hour moving average. Okay? Of course, that will require quite some signals and so on, but that is my current plan. So, if I sum up the core information, is it an appropriate time to go bearish? Well, that's fairly risky if you try to do it. I tried, and so far it isn't working that well for Dogecoin. I failed on Bitcoin, on Binance Coin already. Well, the current thing is that I don't think the market is willing to go bearish. Rather than that, the market is going freakingly stupidly excessive on altcoins. So it's all about dominance, and the dominance is not on a level you're willing to buy. This is a level I had in my chart for quite a bit, and we're trading it right now. We already had pre-signals with exit patterns, which means there is one thing left to show up: price reaction. And until the dominance actively go bullish, which it actually isn't doing now, well, everyone's posting for gains into the altcoins. There's no reason to actively short sell them rather than being an experienced guy and willing to hedge a portfolio. I'm not bearish long-term on Dogecoin, neither on Binance Coin. I just think they're freakingly overvalued now, and I'm trying to hedge a current bullish portfolio with them. So only if you are an experienced trader. Otherwise, Jesus, don't go bearish on altcoins. That would be just as stupid as hell. Now, if you got me right, is it an appropriate time to jump in? Well, it isn't. That's yet another reversal pattern that you guys cannot trade, but we're definitely into an area of interest in terms of dominance. So do we have reasonably high level of reversal potential? Technically speaking, that's a big yes. But the market is short-term excessive, whether that is on Ethereum, Bitcoin, Binance, not Bitcoin, Binance. Lots of altcoins have gone freakingly excessive recently, and that's not a reason to sell. That's a reason to be cautious. That's a reason to either let it happen or go with very limited position sizing and tight stop losses, because things can rapidly turn out to reverse. But until they do, well, it's just an excessive market. And excessive markets trade because of psychology more than technicals. So right now, everyone's buying in because everyone thinks that someone will be dumber enough to buy higher. Well, and so far so good, it's been working out that way. Prices are increasing and we still have more buyers than sellers. Otherwise, prices should reverse, which they do not. So don't fight against the psychological patterns. Just understand in which bigger picture they show up. Do we have to fight against them? No, because they are weekly trends going on. So things can be stupid in the 4-hour charts. That's just none of your business. Just let it happen. If people want to accelerate the trend, whether that's rational or not, is not your problem. If you're out of the crypto market, well, you should have been in for a long time. Now is not an appropriate time to get in, but it's not an appropriate time to fight against. That is the message I'm saying today. That being said, I'll see you guys later.